All right, so volume two, what's the truth about interest rates right now? What's going on?
The interest rates are all over the place, but you cannot just go off one website or just go on the news and the news is saying 6.5% last week. Well, it could really be 5.5% because the news is looking at the national average and it's normally lagging. If you truly want to know what rates are doing, it depends on your circumstance. For some deals, you're better off going directly to a bank. Like if you're trying to get a jumbo loan, so that means anyone that's really trying to get a mortgage over, at least in Central Florida, over 726,000, they should really check with a bank. Like, I don't want to, I'm not a fan. I'm not endorsing any banks like Truist Banks or TD Bank and stuff like that. They have some great jumbo rates that not even mortgage lenders or brokers can touch. But then,
so this video is not sponsored by Truist?
No, not sponsored by Truist. I'm not even a big fan of them. But they do have some great jumbo products. Or if you're a physician, then guess what? No one can beat the bank because the banks look at it as, hey, if I give a doctor a mortgage for $2 million at a rate below market rates, they're hoping that they're going to, when they open up their practice or their assets, they're going to leave it with the bank. So it's their way of baiting the customer, give them a low rate on a mortgage, but then they're going to bring all their deposits with them. But then if you're getting a mortgage under $726,000 or you're getting an FHA or a conventional or a VA loan, you're better off going to a broker because like me, yes, or any other broker. There's tons of good brokers locally. Brokers are very transparent and we're very good at our niche. So yeah.
But you're really good though.
Pardon?
You're really good.
I am good. All right.
When I first met you, you had no white hair.
Well, I've been in this business for almost 23 years, so I'm surprised I only have this much white hair. But certain deals you want to go to a broker. Certain deals you want to go to a bank. Certain deals you want to go to a direct mortgage lender. There's the ones that advertise, oh, I'm a direct lender. Whether you're a direct or indirect, you're still selling a Toyota as a Toyota. Doesn't matter where you go. But certain companies have they're niche products. So rates, truly, what are they? It depends on your transaction. It depends on your credit score. It depends on the week that you're getting a mortgage because they change. Sometimes people don't realize rates change 3 times in one day. I can lock someone at 5.5 today with no points, and then in the morning, and then by 4 o'clock, the bonds have been affected and the same 5.5 rate is going to cost 1 point. Or if you don't want to pay points, the rate suddenly jumped up to 5.875.
So just for our viewers, like when you're in a transaction with a client and you lock that rate, can they get out of that rate and get a lower rate the next day?
So some banks and lenders offer a float down option. That means if I lock you at 6%, for example, and we're talking about note rates, not for compliance purposes, not the APR, which is the true cost of the mortgage. But let's just say you're locked in at 6% rate, and then in 2 weeks into your transaction, suddenly market rates drop to 5.5. Some lenders and banks have a thing to where if the market rates improve by more than 0.25%, they'll let you float down your rate and get the lower rate. Some of them will charge you a fee for it. Some lenders can't do it. So it just depends on what you're trying to do and when. So for example, one bank may offer a 5.5 rate and no float down option. Another bank will offer a 6.5 rate on the same day, but a float down option. Well, then who cares about the float down? This other bank's giving you a lower rate in the first place.
But can't the buyer just cancel and go without
a
lender?
They can cancel, but what happens is you can't, if you're in a 30-day contract and you're 2 weeks into the transaction and the rates drop, well, guess what? You can't go to another lender and close on the last week of closing because you got to transfer. Sometimes some lenders allow you to transfer your appraisal, some don't. But regardless, you can't just switch in the middle of the transaction because then if you don't close on time, you're in default of your contract and you can lose your escrow deposit because you switched the term of your contract.
But I'll tell all our assignments a little secret. If you, Shahram, love your client, you'll close it in 2 weeks.
If the client has their shit together,
Because there are
pardon my
times,
language, I can
that
do
you
it.
close my
Yeah.
deals in 2 weeks.
Yeah, if it's a team effort, the
Yeah.
realtors have to be in place. The mortgage loan officer or broker or whatever has to be in the game. The borrower has to provide. Like if you ask them, give me your bank statements now, they can't take 5 days to give you that.
Mhm.
Or if they go on contract, you can't wait 10 days to do your home inspection and then tell me to order appraisal. But if we have to close, we can close in 2 weeks. You know.
Yeah.
I don't want to panic every time for 2 week closing, but if we have
The
to,
deal
we can
maker
make
right
it.
here. You know what's interesting? The state of the market that Aura published is pretty amazing because in September 2021,
Mm-hmm.
the rate was 2.86%. Really interesting. And today, you know what the
It's
rate
in
is.
the low sixes, depending on whether you're paying points or no points.
Do you think the Fed's going to increase the rates?
Yeah, the Feds have to increase the rate, but the Fed fund rate has nothing to do with mortgage rates.
Explain that to everybody.
So the mortgage rates have to do with mortgage-backed securities. Mortgage-backed securities have nothing to do with the Fed fund rate. The Fed fund rate is for overnight lending between banks. So, but yes, when the Fed increases the rate, over the mortgage rates do follow the Fed fund rate to a certain aspect, but when Fed increases the rate today, the mortgage rates have already taken that into account because mortgages take 30 to 45 days to close typically. So if the Fed is planning to do a increase on March 15th, the lenders have already priced that Fed increase in their loans that they're doing in February. That's why sometimes if the Fed, instead of a 0.5% rate hike, they do a 0.25% rate hike, suddenly you see mortgage rates go down. Well, people wonder, well, why did the rates go down? Because the market is just hedging and assuming what is the Fed going to do long term.
Somebody was telling me that mortgage rates follow inflation rate.
Yeah, more inflation goes up, mortgage rates have to go up. So, Fed's trying to increase rates. They're trying to slow down economy. So the only way you bring down inflation is by slowing down economy. So if people have less money to spend, inflation comes down because they're buying less crap. Mm-hmm. So when the Feds want to boost the economy, they bring the rates to zero. So people have more equity in their home, lower interest rates, everyone's buying, so they feel rich and they are spending more money and inflation is low. But in this case, it's a little bit different.
I think the inflation dropped. Like last month it was like 6%. Now it's like 5%.
It's 5% right now. It's still high, and unemployment's not really going down. But the unemployment data is not 100% accurate because it doesn't take into account the people that have just learned how to survive. Americans have learned how to survive. They will do Uber, DoorDash, and do whatever to make money. So it's not that,
going to the mall, buying Louis Vuitton
and the
bags.
Unemployment numbers are really they don't take into account people that have been collecting unemployment for more than 3 months. So it is a little skewed, and unemployment is still low. So we are the only country in the world that we're trying to get people to become more unemployed so that we can bring down inflation.
Yeah, I think that's a huge factor looking at unemployment. People don't really look to that, but historically, if you look at unemployment, then you kind of see the recessions and how the market went up and down, and focus on unemployment.
Everything is connected. Everything is connected. Doesn't long term, whether you're buying a car, whether you're going to the mall, whether you're, everything is connected. Real estate, everything. So when it all goes down, when the ship sinks, they all sink.
Hope it doesn't sink anytime soon. But the Wall Street Journal, the Chicago Fed president said that the central bank should proceed cautiously with any rate rise increases to assess after effects of bank failures. And he said moments like this, financial stress, is the right monetary approach, calls for prudence and patience. He also said we need to be cautious and we should gather further data and be careful about rising rates too aggressively until we see how they work in the headwinds for letting us turn down inflation. How do you feel about that? Think that'll work?
I think it's also kind of a matter of opinion and political.
Shouldn't we just take a pause and kind of see what happens?
Well, the increase where they are afraid, where this president is coming from, is when they increase the rates too much, they're affecting banks, and that's why Silicon Valley Bank failed, is because
Signature Bank.
or Signature Bank, and they're buying treasuries, so they're buying these long-term bonds and treasuries at such lower rates all this time. So they're thinking, okay, let me put the deposits into assets that are securitized and are backed by the U.S. government. So now if the rates keep going up, and now your bank account, your savings account, or CD is giving you a 5% yield, you're not going to want to keep your money at a bank where you're getting barely 2%. So they're almost like banks were doing the right thing by not buying toxic assets, but because the rates went so high, banks are having a liquidity crunch.
My previous video, I kind of predicted, I don't know if you can agree with this or not, but interest rates, they're not going to hit double digits this year.
No, we would be in trouble.
Yeah, we'd be in a lot of trouble. But
we talk about rates. In the 80s, the rates were in the 12, 14, 15, 20%, whatever you want to call it, correct? Well, you also could buy a house for $50,000 in the 80s. You can't buy a house. So for now, you can't even buy a dirt land for $50,000.
I'll be concerned if rates, a house $50,000.
Yeah, exactly. So rates can't really go. There's only so high they can get the rates going. Otherwise, they're going to just crush the market. And the Fed's intention is not to crush the market. They just want to slow down inflation. But we're not, You can't buy a $400,000 home at 15% rate. No one can afford it. So
correct. That's why you have to have the right realtor and the mortgage expert to find a home, have that equity, and don't overpay.
Don't overpay, and don't overpay even on the rate.
Yeah.
Don't pay too much closing costs, because that's the other thing. These rates are going to eventually come down, because eventually we're going to get a handle on inflation and the rates will come back down. So why waste money on paying discount points to buy down the rate? Because if you're getting a rate of 6.5 right now, when inflation gets back under control in a year or 2 or 3 from now, rate's going to be in the low 5s or 4s. You're going to refinance. So don't waste too much money. Whatever rate you get now, assume when things get better, you're going to refinance and save money.
Yeah, exactly. I've heard that line so many times. You know what it is?
Yeah, the refinance thing? Or don't pay attention to the points?
No. It's like date the rate, marry the house.
Yeah, because your rate is you're not married to the rate, because rates change up and down. You can refinance your home 10 times over the life of the home ownership. But the house, you're stuck with it.
But if I had a quarter for every time I heard that phrase this past 6 months, it's like a slogan built into every realtor's mind. Date the rate, marry the house. I mean, essentially it's true, but I don't want to hear it every second.
Well, unfortunately, we're in such a volatile environment that you can't focus on the rates, and also they change so fast, so much. People don't realize some weeks we can have a 0.5% rate swing and the media won't talk about it.
I mean, the rates, they don't really faze me because I understand the market. You understand the market. It's like I can find a home for a good price and kind of subsidize that rate that I'm getting it for a good deal. This home, I'm paying a higher interest rate, but from last year to this year, it's basically the same monthly payment if you do it right.
Yeah, if you do it right.
I mean, I know Orlando. This is my home. I grew up here. I've been since 1985, so I know what the prices are. Historically, I follow them. It would be a disservice if I went to Hawaii, for example, and started studying real estate. I don't know what the hell the Hawaii real estate market is. I have a friend over there, but it's this is why it's essential. It's go with someone you trust that knows the market, that understands. I mean, you've been through the last financial crisis of 2008. So you've been through the trenches. You understand what to look for. You can kind of counsel and guide your client, be that confidant.
And with the real estate broker or agent, you want to use someone that, when the real estate book says farming, it's so important because you want to deal with a real estate agent that focuses in an area and knows that area inside out. For example, I live in Lake Mary. You're in Dr. Phillips Windermere area, which is your main focus. You know that market better than anyone else. You're not necessarily going to go and show a house in Sanford because that's not your niche market. So, work with a real estate agent that focuses in their primary market and doesn't try to be a jack of all trades, just You've got the experience in your
But
market.
sometimes I am a jack of all trades. In my trunk, they have
Yeah.
tools,
There
WD-40,
you
all
do.
kinds of
Well,
stuff.
your tools are you got agents under you. So if you've got someone that's looking in Lake Mary, for example, you'll hand off that buyer to one of your trusted real estate
Yeah.
agents that work under you that specialize in Lake Mary. So you almost want to deal with someone that is specializing in that area in this volatile environment.
Mhm. So team up with somebody you trust that has experience. Like I can drive down a road and pass by different neighborhoods, and I can tell you what the prices per square foot are in each single neighborhood. What's the average
In
days
your
on
market.
market in my
Yeah,
market? Because I
absolutely.
understand it.
Yeah.
It's like you have a pulse on the market. That's one thing that kind of people should understand. Real estate, also the mortgage business, it's not a part-time gig.
Yeah.
Like every single day we're in it. It's like, if I'm having lunch, breakfast, dinner with my wife,
Yeah.
get a phone call, I answer it, always on call. I have clients who are doctors who are on call too. That's great. They're saving lives and everything. But, in real estate, I'm on call 7 days a week. You're on call 7 days a week. Why? Because we care about our clients.
And this is our full-time job. It's not a
That's
part-time
true.
job.
But we generally care about our clients. We don't want them to fail. It's not about a one-time thing. It's about a long-term relationship that customer feels comfortable referring us out to their family and friends.
Absolutely. You never want to be a transactional agent because you're only as good as your last agent. So you work on relationships. So absolutely.
Because I see deals right now. If I'm a listing agent, I will get top dollar for my seller, even if it's a crazy price and they want it. If a buyer comes along, buys it, that's not my client. But if I represent the buyer and I see something overpriced, I will explain to them the historical values, where I feel it's worth. Because I still see properties now where I'm scratching my head wondering how to close for that. But a realtor just wants to make money.
Yeah.
Doesn't have the right tools, the knowledge to guide their client.
And real estate agents are very transparent. You can find out what each real estate agent that you speak to, how much business they do. You don't want to be doing business with someone that does one transaction every 12 months because they don't have the experience, unfortunately.
Yeah.
So, when someone looks you up, they can go on Zillow or Realtor.com and look up Simon Simaan and see your transactions, and your transactions speak for themselves. Yes, you're confident because you're an expert in your market, but you're also doing a ton of transactions. So people want to follow leaders, and leaders are normally leading because they're doing something. They're not,
Yeah. I mean, it's our wheelhouse. Like, if I was sick, and I want to go see a doctor, I'm not going to go to any doctor.
Yeah.
I'm going to do research, find out who's the best doctor in that field, and then go to that doctor.
Yeah.
Same thing when I get on an airplane. I hope that the captain is experienced and they know what they do, but they have that trust in that person. Same thing for real estate. Same thing for mortgages. Because think about it, a mortgage, it's a 30-year thing, right? It could be 15, it could be less, you could buy down.
It's a long term,
It's a long-term thing in your life. Owning a home, if you live in it for 5 to 8 years, you want to be able to sell that property and have enough equity in it to buy something else and upsize and downsize. Don't fall into the trap.
Yeah, absolutely. Do your research. We live in times where there's this amazing thing called Google, and you can look up people.
And the internet, right?
Is Google the internet? And this Chat GBT,
Internet
whatever
spelled
thing
with
that they
a capital I, isn't it? Yeah, internet. Remember AOL back in the day?
Yeah, America Offline. Yeah.
I still have my AOL address from high school.
Wow.
Yeah.
Well, frame it.
So does my wife too. Funny thing, it's like when she came to America, she's like, "What email address should I get?" I'm like, "Get AOL."
Oh,
this is a joke. And then she went to school, and all her friends were making fun of her, like, "Who has an AOL account?" But hey, it's like nostalgic. It's all good,
and it still works.
Yeah.
All
right. Well, I guess we'll dive into why number 3.